Alright, good morning everyone and welcome back to the channel. Yesterday I missed the video, I was on my way back from Scotland. Today, however, we are getting back into the market. A quick breakdown on EURUSD is with us. Starting off then on the high time frames, essentially what I can see on EURUSD is a little bit of a weekly trading range going on, which we have between this area and obviously this area up here as well. So we are ranging currently on the weekly time frame, but it is giving me some interesting looking opportunities, and I do think we can get some trades regardless of where the direction goes long term. So if we look at the actual weekly, we can see that a supply zone was retested here, and since then we actually sold off. We formed a higher low over the previous trend, but then we formed a lower high and then a lower low over this one. Now we are still maintaining the range, so this is difficult to say whether or not this is actually going to be the start of a bearish trend. We may still get one more push up. We could actually just push up and take out the highs, but we'll have to see. With the supply zone retested and obviously the weakness coming in now, I am a little bit cautious of the fact we could move quite far down. Now, if we do move down, it's not a bad thing because we can get trades on the way down there. We do have quite a large downside imbalance, which brings us into this weekly supply area. So there is a fair bit of downside room that EURUSD could push through. Now, in terms of the daily chart and the near-term ideas, what we can see is that this low was taken out, but we did come and trade into a demand area here. I believe if we go to the 4-hour time frame, scale all the way back to this previous price area, we will see that we reacted quite nicely from a 4-hour demand area. So if I just grab the parallel channel tool, plot it onto the very bottom candle of this movement on the 4-hour, and then scale it back to where price is now, you'll see that we did indeed come in and retest that zone before pushing up. Now on this push up, we did form, first of all, a bullish break of structure at this point, but we then maintained the high and actually formed equal highs just up here. So this is not showing a swing structure break, right? We have this kind of substructure break here. We don't have a swing structure break, which obviously tells us there's not a massive amount of strength in the market. We have, however, formed equal high liquidity, so we could potentially come up and push into some of the supply area here before selling off on a larger time frame basis. That's not my focus for now currently, because obviously it's quite far off. What I'm interested in is actually this lower time frame structure. So if we go to the 4-hour time frame, following everything we've spoken about so far, we can see that this is a current downtrending movement with obviously lower lows and lower highs forming consistently. Now, the most previous lower high comes in at this area where there is a large imbalance leading into it. What this tells us is that we have sold off. There is quite a lot of selling pressure coming out of this region. But if we then look towards the 4-hour bullish structure that we have here, we can see that the market did react indeed very nicely from this 4-hour demand zone. So all of the imbalances in this area have now been filled. The market has found a reaction in this area and started making a push to the upside. Obviously, as we've mentioned, we cannot be sure whether or not this is going to go bullish or bearish long term. But as we know, imbalances are often filled. And now that we've reacted from a demand area and we're showing some strength, I would not be surprised at all to see this region filled, trade into this point, then potentially we can look for sell-offs or breaks above from there. But this range here is going to give us a nice tradable opportunity. If we look at it, it is around 40 pips up from where price currently is, and we may even get some additional bullish movement if we can pull back and get a nice entry on. So bringing it down to the lower time frames then, I'm going to go to the 30-minute time frame and show you what it is that I'm currently looking for. Now, the first thing we can do on the 30-minute is actually refine the supply area to the top candle, the move where the impulse began, all right? So this is our refined supply area. If we want to be a little more conservative about it, we could extend it to this blue candle. So we'll keep it there for now, and we can then clearly see that we have a large imbalance leading up into this supply point. So for me, for now, I do believe that this is very likely that we're going to come and fill this. Obviously, if we look at the current structure as well, we can see that these highs have been taken out with a bullish break of structure. Now, another thing of interest that I can see, if we bring this to the 15-minute time frame, is that we've had, first of all, the reaction, and then an impulse, breaking structure, pullback, impulse, just about broke the structure, and then we've had a deeper pullback. So what this deeper pullback has actually done, if we just mark that on real quick, is pull through the liquidity under these lows, okay? We can see we had a lot of generally equal lows here in the market. They have now been swept out, and we've actually traded into this demand zone here. So if I mark this demand zone on, you can see there we had imbalance leading into that point. That has now been fulfilled. The liquidity and the imbalance has been filled through these levels, and the market has started moving back to the upside. Now, this demand zone is a nice one because it is obviously a large consolidation area, a large area of buying pressure as indicated by the wick. And then this is where the impulse came from. So this is a high interest zone because it's the zone that broke the structure, and it's the zone that caused a large impulse. And now that we've fulfilled that zone and started moving back to the upside, it could be a very nice area to begin targeting buys from. Now, I'm not too interested in any of the previous structure because it's all very efficient. Now, we talk about imbalances. When price isn't imbalanced, it's running efficiently. And this is efficient pricing where we retest each movement as we go. Okay, this is where the inefficiency began, and that inefficiency has now been filled. Now, we don't actually have any clear movement and any clear direction until we get some more breaks of structure. If we look at the market price here, we can see we have the equal highs coming in, and we do now have this next significant structure point. Because if we look at this on a structure basis, we can see, okay, we had one break of structure, we've had two breaks of structure, but then this actually could be a bearish break of structure back under this. So for the meantime, in this current structure, just from this point onwards, we're bearish, okay? So until we actually go and break the bullish structure and confirm that we are moving up, we should not be buying. That doesn't mean go ahead and sell the market because we don't really have too much confirmation to do that either. But it does mean be patient and wait, first of all, for the market to break this structure before considering any form of buying opportunity. So if EURUSD can go ahead and break this bullish structure, that's going to tell me that we are bullish indeed. This move was just the pullback that it looked like to retest the demand zone and fulfill the liquidity and fill the imbalance. What we can then begin to do is wait for pullbacks and then buy this thing up into the highs with our confirmation entry, which, as you'll probably know by now if you've been watching my videos a while, looks a little something like this. So we want to see the lower lows and lower highs turning into a new impulse of higher highs and higher lows, and then we look to buy from around this area using demand. So if we can come and trade into a demand area in this point, if we go to the low time frames, we'll see if we can find anything. It's a little bit tricky. We do have this zone here. Obviously, we do need to see the bullish break first. So we'll generally be looking to use whatever zone it is that breaks the structure. This could obviously pull back, trade into this point, then rally. If it does do that, we would then be using the demand zone that comes off of this structure move to buy from. But what we have is an opportunity here to actually buy EURUSD, following confirmations and following the structure to take this thing all the way up into 1.1775. We will have to be discretionary about our entry when the entries come around, but when they do, we should be looking at a nice position of over 5R if we can get this thing on and if the structure moves in the way we want it to. So that is my markup of EURUSD. That's what I'm looking to see for the week ahead. I hope you can work with this, and I hope it gives some profitable opportunities to all of us. Thank you for watching. Please drop a like and subscribe if you enjoyed the video so you don't miss any future content. I put together a free mini course to highlight the reasons why you're not winning at trading. It's going to show you the top 10 reasons why you're losing and how you can actually turn your results around. This course is a 13-part video series. It's entirely free to join. All you need to do is go to the link in the description and sign up. Now, I hope you enjoyed that course. I hope you learned a thing or two. Many students have given me a lot of good feedback after going through the course, and I'd love to see how you progress your trading from taking this course. So remember, the link in the description is going to take you to that free course. Hope you enjoy it. Let me know how it goes.